This content is brought to you by Link2, which makes private equity investment very easy. Link2 is democratizing the process of being able to invest into tech companies and crypto companies. Previously, this opportunity was only available to venture capitalists, hedge funds, and investment firms. Well, now, if you are an accredited investor, you can get this opportunity before you to be able to invest into crypto companies like Ripple, BitPay, Dapper Labs, Uphold, Abra, and many more. Link2 continues to add these respective companies and their portfolio is growing. So this is a great opportunity to double dip, to be able to hold the crypto tokens such as Ethereum, Algorand, XRP, or whatever it may be, and also invest into the companies that are building the infrastructure of the crypto market. And Link2 was part of the group that invested into Coinbase pre-IPO. And of course, that did really well for them. Well, you have the opportunity to catch the next Coinbase with Link2. So definitely check them out. It's once again the opportunity to double dip, just like the VCs, just like the hedge funds. Check out Link2, link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Greg Dickerson, who's no stranger to the show. We're going to talk about Bitcoin, the markets, the Fed, and much more. Greg, thank you for joining me today.
Hey, Tony. Thanks for having me back. How you doing?
I'm doing well. When the Fed minutes were released this week, I was like, I got to talk to Greg, get his pulse on what's happening across the board. So I would love to get your take on the minutes. They talked about more rate hikes coming, maybe another 75 point hike. And also Bitcoin seems to be moving up in price, but could this be a trap? And I want to get your thoughts on all of that.
Yeah, so the Fed minutes just basically confirmed what Powell and the board members have been saying, is that they're serious about bringing inflation down. They're not going to bend. They're not going to buckle. They're going to stay the course. So there was no surprises in the minutes. Just very strong language about taming inflation. So there's every reason to believe, especially with the jobs report that came out today, the jobs market seems relatively strong. The oddity is there's twice as many jobs as there are people looking for jobs, which is interesting, but that's giving the Fed even more resolve. Some of the board members said today, hey, job market looks healthy. Economy hasn't slowed tremendously. So, 75 basis points is definitely on the table. You might see 100 if inflation comes out really, really strong next week on the 13th, but you're not going to see them back up.
Yeah, it kind of is along the lines of what we've been talking about, that more pain was ahead. And it looks like this could go into July, into August. And then I don't know if we see a reversal sometime September ahead of midterm elections. Who knows? But what's interesting is Bitcoin has been moving upwards in prices, over 21,000 today. What are your thoughts on that?
Yeah. So, a lot of people are talking about a reversal this year. That's not going to happen this year. You might see them step down. If inflation gets under control, you might see them drop back to a 50. You're not going to see a reversal this year. It just isn't happening. And that's a narrative that's being put out by Wall Street because they're in trouble. they're trying to signal as much as they can to, it's hopium. They're just hoping and praying. And, that would be the only thing that's going to rescue the stock market at this point, because it's still got some work to do, because of the pricing. It's repricing. Valuations are still out of whack. The liquidity's dried up. So, that's all that is. Hey, keep the money coming to us because we got nothing else.
So you don't think there's, and once again, more of a political factor, given that some of these Democrats, up for re-election or whatever it may be, you don't think there's any credence to that it's just, like you said, like some sort of hopium narrative put out there?
No, the political narrative needs to be, we're serious about inflation. We're serious about fighting it. The Fed's fighting it. So if they were to back off right now, inflation would just, rocket fuel, right? So they have to stay the course politically on inflation right now. Where the political narrative changes is that once they brought inflation down a little bit and everybody's suffering, all the assets have deflated, then they can come back to the rescue and pump the markets back up again. So that's your political narrative in terms of a policy change. Flipping is to the next presidential election cycle. That's the one that really counts. They've already lost this one. So the next one is when, that really counts for Democrats. Republicans right now have the momentum just because of where we're at in the economy, inflation. The policy right now from DC is seen as very weak and soft, and just out of touch in terms of how to control inflation. And from an economic standpoint, a lot of different issues there. And that's, whatever political line people fall on, that's just the reality of what's going on with the polls and everything else. So what they want to be able to do, the Democrats, is come out next year, next 2 years, and say, hey, we saved a sinking economy. We brought the country out of recession. We got inflation under control, all that kind of stuff. So they're going to kind of give this one away because they know they can't win it anyways.
Sure. Yeah, that absolutely makes sense. So it looks like this year is a wash, and it's probably until next year that we start to see, like you said, potentially some sort of reversal.
Yeah.
I would love for you to share the Bitcoin chart and tell us what you're seeing.
Yeah, let me show you what I've been looking at here. I've spotted a couple of interesting things. So we're talking about the Fed and policy and all that, and a lot of people, have different opinions on that with the Fed, pivoting and all that. Most of the people in the investment world, traditional markets and crypto, never been through a macro bear market. And this is a global macro recession, inflation, bear market environment that we're in. And then a lot of people in crypto have never even been through a crypto bear market. Most of the people, I don't know, 50% or more got in back in 2021 on the way up. They've never seen a real in-person with their money at risk bear market in crypto. My opinion is we've been in a macro bull market, in Bitcoin since inception. And these are just corrections along the way that we've been just basically since Bitcoin's begun. It's been in a Fed easing, quantitative easing, zero interest rate environment. So this has been one big bull market with corrections along the way. Granted, they're 85% corrections. But when you take that in relative terms compared to the stock market, which has had, 30% corrections here and there, at different points, then it becomes, this is the crash, obviously, in the pandemic. But, the stock market gets these corrections along the way, since it's been in a macro bull market. If we go on a weekly chart, you can see it even better that, going back to 2009, the Great Recession, that's when QE and zero interest was started. And that's just a big bull market. And Bitcoin's been in the same. And you get these big pullbacks along the way. So, Bitcoin and crypto have obviously always been amplified compared to the stock market. So it's, bigger peaks, bigger valleys, right? So This is the first real macro bear market that it's been in. And what I've been watching specifically, like a lot of people, are these trends of the levels down. So this was the Do Kwon, buying spree here that kind of skewed this level down that we've been having ever since the top as price kind of stalls out. Then, basically you have an accumulation, distribute, drop, accumulation, distribute, drop. That's kind of what's going on with the whales trying to get out and unwind and things like that. This is where Do Kwon and Saylor and everybody was buying. Those guys are out of the game now. So now it's a much more subdued accumulation to distribute in the upper range and drop. And when you look at this, people would say, well, why would somebody accumulate at, 18,000 to sell at, or this back here was accumulating at 28,000 to sell at 31,000. If you're working with hundreds of millions of dollars, that's a nice little profit.
Oh, yes.
So, that's kind of what's going on here. And these are just steady unwinding of the liquidity and just profit taking, working its way down versus a big old dump where everybody's out and you got nobody to distribute to. The other thing that I've been watching, and of course, this is the trend line. And, we had the inflation print came out the 10th of last month. That's right here on this candle, right before it checked this trend line and then went for the big drop. And, that was basically 5 days before. And then the Fed came out on the 15th, which is right here where you had the little bounce, so everything unwound after the inflation print in advance of the Fed doing their thing. It bounced on the news of the rate hike because, that's just what it does. The market's like, hey, the Fed's serious about inflation. Let's celebrate. Then it's like, we have inflation, and it drops again.
Yeah.
So that's kind of what we're looking at right now, where we're at in the process right now. Is inflation print is the 13th next week. So you could see the price come back, hit this trend line, and maybe start dropping a little bit ahead of that as we get into next week. All of the, forecasts for inflation are going to come out. So that's going to spook the market. They're going to start unwinding, and it could continue down, where the Fed meets around, what is it, the 16th, I think? Or no, the 13th is the print. I think it's the 25th, 26th at the Fed meet. So it's a little bit further out this time than it was last time. But we're in about the same time, time frame that we were last time when this happened. So here's your last day of the drop, broke the trend line 20 days later, last day of the drop right here. broke the trend line 22 days later. So it's kind of following, the same patterns. And then the last thing that's really kind of interesting to look at is the Bitcoin hash rate indicator, the buy signal indicator. And we had, miner capitulation. We know the miners have been selling. And it looked like on this price action, let me get back here. It looked like on this price action that we started to see maybe a little bit of a change, and we got this green dot, which often you get a dark green dot before you get the blue, buy signal, just like we had, last summer, right? So this is where it starts. We had that little break, and then it went in for the real capitulation before you got that buy signal. And you see this little green dot pattern where it kind of faked everybody out, thinking, oh, we're coming out of this in this, consolidation range before the last leg down of capitulation. And that's kind of what we've got right here, where we had this little bit of consolidation, range here with price. It looked like we were going to get a break because price is running up. And then all of a sudden, this capitulation signal starts moving down, ahead of the price action. So, that's indicating that, miners are still capitulating, and we still have, one more leg down. And we all know the miners are selling because they're underwater. The cost of a Bitcoin, to produce a Bitcoin right now is around 30 grand plus or minus, with overhead, electricity, borrowing costs, all of the different things, not just the raw cost. The raw cost is probably 8 or 10 without all that other stuff, but they have real labor, taxes, insurance, all of those other things, puts it around 28 to 30. So they're big time underwater right now. So there's, that's probably going to surprise a lot of people to see that capitulation signals start to grow like that. So that indicates that, there's more of a leg down to come. And really, that was only about a 10% drop last time from the lowest level. So if that were the case, that's around 16,000 for Bitcoin. And I think most of your technical analysis out there is showing that the near downside is probably in that, 13 and a half, 12 and a half, 13 and a half thousand range when you go back to, this level right here, which, once you break that previous all-time high, your next stop is that 13, 12 to 13,000 range right in here, where you have major market structural support. So we've broken that. If it breaks it again, your next stop is right here, really in this area right here, 13, 14, and then down in here. I mean, you've got this to get through still in the, 17,000 range, but, that's probably what's going to happen next.
Sure. And that absolutely makes sense. And like you showed on the chart, that pattern is repeating again with the inflation numbers coming next week, and it may spook the markets. We go down again. So are you going to be buying at the 12 to 16 range? I know you're more of a trader versus a hodler. Are you looking to take positions there?
Yeah, more of a swing. I don't hold long term. I get out at the top. So, I got in, last year on the way up, got out, so I work the bigger moves, and I've got a profit margin in mind that works for me. So that's just my strategy. I'm not somebody that's a long-term believer because I don't know the future. Nobody does. So I can't tell you for sure Bitcoin will ever hit 100, will hit 500. I just don't know if that's realistic, probable. I know it's possible, but I don't know if it's realistically probable. Just like the downside. I don't know for sure how far down it'll go. I know that we've stopped at 3,000 in the last few cycles to 4,000 in that range. Can it go lower than that? That's realistic and probable, but is it likely? Probably not, because of the last two big levels of support. So yeah, once we start getting around that 14,000 range, I'll be watching macro conditions, Fed policy, CPI, and if inflation starts to level, if the Fed is talking about reducing the rate hikes, not stopping rate hikes, but reducing. If they say stop, man, boom, it's off to the races, right? But if they can back off a little bit, and inflation's a little bit under control, recession's not huge. We're already in a recession. We've been in one since January, technically. So if those things are easing, then that's going to be a really good level to buy, probably for me. I'm not telling anybody what to do, but for me, that would probably be. I would be okay looking for, to get back to that 50, 60,000 range, in some kind of a short order, as long as the markets are healthy and, we've got confluence with traditional markets. If things still look bad, I'm going to wait and see if it breaks 10,000. And if it breaks 10,000, you're going to go back and revisit that, 3,000 to 4,000 level we saw at the March pandemic, because we haven't seen a washout. We haven't seen people give up. You still have people calling for an all-time high reversal right now. You still have people saying this is the bottom, and you still have a lot of denial in the space of where we are from a global macroeconomic perspective. So, that hasn't been washed out yet. And, there's some thinking out there that you got to kind of have that and get to that panic capitulation selling that we haven't seen yet. These levels that we're watching, those are deliberate to not cause a big panic too soon. Those are accumulation distribution levels. A lot of people don't realize that you can accumulate for a short position. So, that's what's going on there. So it's a very deliberate, controlled thing by the larger, holders and the whales, because they want to still be able to maximize their profit on the way down as they're shutting equipment off and, things like that, and trying to figure out how they're going to survive. And then you have, the lending issues and, the contagion out there and collateral damage from all of the other lending and speculative platforms that we've seen with Celsius and Voyager involved and, all that kind of stuff.
That's a great point you brought up about those levels, and that folks are, accumulating for shorts and so forth. That's a great point. I think many folks don't know about. On the flip side, are you planning to also look to accumulate some stocks as we, both crypto and the stock market are correlated? So once we get down to these very low levels, are you looking to take positions there?
Yeah, I'm watching it all reprice, especially the tech sector with the strong tech companies like your Apples and, Facebook and, Microsoft, Amazon, the companies are going to be around for long haul. I'm watching Ford, Coca-Cola, all the big, blue chip companies, and, watching them get back to those levels. And, some of those companies, I bought Ford at $1.90 in the March 2009 bottom. So I bought Citibank back then at, 90 cents, $1, whatever, the $1.19 it might have been at the low. And Ford was $1.90. We're going back a long time, but yeah. So that's kind of what I do with those, is I wait for them to get really low, and I'll jump in there. So the markets still have some room. And again, all you got to do is watch inflation and watch the Fed. That's your buy signal indicator. That's when the bottom is put in. They're going to tell you when the bottom's in, so you don't need to guess. And when I say bottom, I don't mean the exact number on the exact day. When I bought back in March of 2009, we probably bounced off the bottom a little bit. But that's when the Fed came in hot and heavy and provided support to prop the market up. So it was, you're pretty safe bet that you bottomed out at that point. Right now, until inflation's under control and the Fed stops and pivots, that's when you got bull market on, and it's just green lights go. That's when you can, if you're that way, you can go all in on whatever you want to go all in on. That's when I'll make the biggest bets, is when I know they're supporting the markets. But I'm going to get out at the top too, because I'm not going to, not going to wait and hope that it comes back in a year, 2 years, 5 years, 10 years, because that we don't know. Anything can happen. World War III could break out, whatever. So you want to take those chances and you want to have those upper numbers that is realistic for you to get out at, so that you can take care of the things you need to take care of. And you just can't expect something to continually go up always and forever to these huge numbers that we've seen in the industry, because we just don't know that's going to be the case.
And finally, I wanted to ask you about real estate. I know we've talked about sometimes it can be hyper local, based on the markets across the United States. I was just even talking to a realtor yesterday about my investment property, and he's like, yeah, if we wanted to sell, it would have been 3 months ago, but right now things are starting to cool down. What are you seeing? And I know, once again, it's hyper local sometimes.
It is. Every market's different, but generally this time of year, the summer, it slows down anyways. So you've got that with high interest rates and with the correction in the markets. We've definitely rounded the top. We're probably in the same position in the housing market that we're in traditional stocks, and about 20-30% off of the all-time highs is kind of probably where we're at on average from a value correction that we're seeing. The best thing to do for people in your market is to go look on Zillow, and you can see new listings starting to pile up every day. Inventory levels go up. You can see big price reductions. Now, a lot of those were astronomically priced to begin with.
Sure.
So you might see a $500,000 house or $600,000 house with a $100,000 price reduction, because it's really a $300,000 house, right? So it's still $100,000 over where it should be. But, what you really need to see, somebody asked me this the other day, what would it take for real estate to immediately correct like stocks or crypto? You need rates in the mid to upper sixes, and then you'd see it fall off a cliff completely, where it would just really completely reprice. We've seen, price corrections in the 30 to 40% range, and, markets like Arizona, Nevada, Las Vegas, Nevada, Austin, Texas, some areas of Charlotte, North Carolina, Atlanta, the big Southeastern Sunbelt markets that everybody we're moving to. That's where you're seeing the biggest corrections right now. We're also seeing a couple other things that are interesting. We're seeing about 15% of the people that rent are behind on their payments, not making their payments. We're also seeing rents start to back up in some of these markets now. So, just like everything else, rents, have a threshold that, you'll reach critical mass. You can only push rent so high. You can only push mortgages so high because people, it's all payments. It's based on their income. And at a point, people start moving, they stop paying, and you'll see that. So we're seeing rents correct. We're seeing housing prices correct. We're seeing, mortgage applications just fall through the floor and just tank completely. So we're just at the beginning stages. And if rates get into that, like I said, that mid to upper sixes, in the sixes, it's been back and forth, upper fives to low sixes. But if it gets up into the mid to upper sixes, that's when you'll see some serious damage in the housing market.
So it's almost like take your summer vacation, don't pay attention to the markets, and then just wait for the signals from the Fed, right?
That's it. You just watch CPI and watch the Fed's response to it. And then that will tell you when you've bottomed and when it's bull market on. And when it is, I'll be the first one on here going, it's time, and it's just not time yet. We're still unwinding. We're still repricing. And this is not the bottom, 17.85, whatever it was. That's not the bottom. Markets haven't hit bottom yet. There's still a little bit of work left to do. And I'm not saying, these real lower levels is where it has to go. I could be completely wrong. We might just reverse, and who knows? Bitcoin can do what Bitcoin can do, right? So you just never know. But there's not a lot of catalyst out there right now to really drive the price exponentially like we've seen it do prior to the tightening cycle that we're in right now.
Yeah, it seems like there's more risk of collapse and downside, right? We've seen Celsius and there's Voyager and all the stuff you mentioned within crypto.
Well, the big leverage buyers. So they were huge leverage buyers that were, borrowing from each other. So that's what a lot of people, you got to understand where the money was coming from to pump the prices. It was everybody leveraging and lending to each other to do all these things and printing tokens out of thin air to prop it up. That's how it was happening. And then you had Michael Saylor on top of it, buying at the high levels. And you had Do Kwon on top of it, buying at high levels. Michael Saylor, by the way, was borrowing, to buy, not crypto, but borrowing. Well, he borrowed off his Bitcoin, but leveraging his company. He can't do that anymore. There's no debt for Michael Saylor anymore. I mean, you see, he's buying 10 million now off of cash flow with his company. So he's not a player in the value anymore. He can't do anything. Nobody else, Elon Musk is not going to step up. Maybe, that would be the only thing that would, drive it. He's got the cash, but he's not doing it personally either, because he knows better. If he was such a believer, he would be going in personally and doing some things. He's not, so you're missing the leverage, buyers and players that have kept that price propped up. So that's a lot of what's going on there. And then you have, the Mt. Gox situation. Apparently, that's going to liquidate here in the next month or so. That's not going to tank the market, but it's going to put selling pressure out there. And, the thing is, a lot of people are like, oh, the whales are buying. Well, they're buying here and distributing here for a couple of $1,000s on thousands of coins. So they're making some big money. The other thing to remember about that too is, the whales are buying, but somebody's selling. So, if they're selling, you know what I mean? There's just as much selling going on as buying. Oftentimes it's the same person buying and selling from themselves. So just understand what's really going on when you see these levels that we're seeing. It's a very deliberate, calculated unwinding without creating a panic so that they can get out of their positions and then let it go.
Sure. And then some of it is happening via OTC as well, right? Where it's not recorded on the market. So we sometimes don't know the true amount that's being sold.
Yeah. And, so you have on-chain, and on-chain always looks bullish. It always looks good. And, you've got all these indicators, but you got to remember that's lagging, and it's also manipulated because the whales know that you're watching on-chain, and people will say, oh, all these coins are moving off exchanges. That's because people don't trust the exchanges. So if I'm going to buy $100 million worth of Bitcoin, I'm going to pull it off the exchange. Even if I'm going to sell it 2 days later, I'm still going to pull it off the exchange. So when you see those moves into cold storage, it doesn't mean that they're holding forever. Even if it's a wallet that, has, coins over a year and all that, they know what they're doing, and they know that it's being tracked and watched, and they don't want to create panic, and they want to make the market think what they want the market to think. And then some of it is, some whales that are just there forever, and they're going to buy as much as they can, and they believe in the scarcity of it. But, at the end of the day, what you got to remember is, do you want to buy an asset where only 5 people control it?
Hmm.
You really don't want that. You want a little bit more of a distribution there and decentralization, and smart money knows that. They're not going to be in an asset that only a handful of people control because, they could liquidate you at any time.
Right. Greg, always great insight and advice. Appreciate you. And, as you said, when you're ready to buy, I definitely want to have you on to talk about that.
Everybody's waiting for it, man. They're like, when are you going to be bullish? I'm like, hey, when the Fed says so.
Right. Well, let's see what happens over the next month. Maybe I'll have you back on if there's something new or something we didn't see. But I appreciate you taking the time and sharing your thoughts.
Yeah, thanks for having me. It was great chatting.